In this video, I'd like to show you how to actually make your adjustments. So the first thing I want to do is, if you take a look at what we're going to now call an unadjusted trial balance, because it's before you actually make your adjustments, what is your net income before adjustments, before we actually do our adjusting entries? So your income minus your expenses is 610. So now let's actually do your adjustments and see what happens to net income after adjustments. So the first thing it says is supplies on hand, December 31st, was $10. So if your supplies on hand was $10, your adjusted trial balance is going to show you ending balances, or what's on hand, what you still have. The adjustments are going to be what you consumed, what you used, what has expired. So hopefully that will help you figure out where these numbers go. So if it says supplies on hand on December 31st, okay, December 31st was $10, we had 80. How much do we have on hand? How much do we still have in our closet? 10. So how much did we use? If we had 80 and now we have 10, how did we get from 80 to 10? And one thing that you might want to do, I should have made this bigger, is you might have wanted to make a T account. So here's my T account. I have supplies. We started with 80. And we have 10 left over. So our ending balance is $10. Okay, so that is our ending balance. We started with 80. How did we get to 10? Okay, and then it's 70. So 80 minus 70. And sometimes you might have to add the numbers depending on what's going on. So you had 80, now you have 10. How did you get there? Well, we have to credit. 80 debit, a credit of 70 gives us a $10 left over. So our adjusting entry is a 70 credit to supplies. I don't balance. My debits must equal my credits. So if I expensed it, okay, I used it up, I have to show that my supplies expense is now 70. Okay, so you're taking an asset and expensing it. Okay, the next one says fees earned but not billed on December 31st. So on December 31st, you were working on a job and we haven't billed it out yet. But we earned it, so fees earned but not billed out yet means that one of our customers owes us money. So this is something that we've accrued, but we haven't put on the books yet. So fees earned is 55, so our fees earned right now is 800, and we just earned 55 more that's not on the books. So as you can see, our new balance, 800 credit, 55 credit, add them together, and you get 855 for a total now for fees earned. But don't forget, you do have to have a debit and a credit, and if it's earned but not billed, somebody owes us that money that we haven't billed out yet. So that's the other part of the entry. Okay. The next one is depreciation of equipment. Was estimated to be $20 for the year. So here's your equipment account. We don't touch the equipment account. If we want to depreciate the equipment, we're going to use that accumulated depreciation account. It's a contra account. It goes against our equipment. So we've already depreciated $30 of the $600, and now we're going to depreciate $20 more of that equipment. So 600 minus 30, because it goes against the 600, our equipment now has a book value of $570, okay, before adjustments. So depreciation was $20. So I do have to, and that's an asset, I have to depreciate it $20. Okay. So we credited the asset, but we used accumulated depreciation to keep track of all the depreciation on that piece of equipment, because we don't want to lose what the actual cost of that equipment was. That's why we don't credit the equipment account. Okay, so now what I'm going to do is make sure that my debits equal my credits for my adjusting entries, and they do. So hopefully I did this right. So now I come back over here and I didn't do anything to the cash account, so my balance is still $300. I did do something to my accounts receivable, a debit and a debit, so make sure you understand debit, debit, you add, credit, credit, you add, debit, and if it's the opposite, if it was a credit, then I would subtract. So debit, debit, I need to add together for 75. Here, like I said, debit, credit, now you subtract to get 10. 600 debit, we didn't do anything to that. A credit and a credit. Accounts payable, we didn't do anything to. The capital, we didn't. Credit, credit gets added. Wages, expense, nothing. Supplies, now be careful. That is in the debit column. Sometimes it looks like it's in the credit, but it's not. So now if I go ahead and add those up, make sure that my debits equal my credits. Now what is my net income after adjustments? 855 minus the 150 minus the 70 minus the 20 minus the 40. My net income now is 575.